All right, today we're jumping into a really fascinating analysis that looks at this huge collision happening in the global markets. You've got the fear of war on one side, and on the other, a nearly $2 trillion financial event that's kind of flying under the radar. So, what actually happens when geopolitical chaos slams into a tidal wave of cash?
Okay, so this brings us right to the central question our source material is asking. What's really driving the market right now? Is it the scary headlines you see on the news every single day? Or is it the invisible hand of this massive injection of capital? That's the core conflict we're going to dig into.
And this slide just lays it out perfectly, right? On the left, you have everything that's got people spooked. Conflict in the Strait of Hormuz, global shipping grinding to a halt, oil prices spiking. And that's the stuff that grabs headlines. But then on the right, you've got this quieter, but maybe even more powerful force. A 1.7 times trillion dollar refund coming from a Supreme Court ruling, and it's getting poured directly into major corporations.
So let's really break this down. We're going to look at the crisis that everyone sees and the financial bomb that almost no one is even talking about.
The thinking here, according to the source, is that all this geopolitical chaos is basically a giant smokescreen. While everyone's attention is focused on oil prices and conflicts, this massive financial event is quietly building what the analysis calls an invisible floor under the stock market, especially for tech stocks.
So, what is this floor? Well, the source has a name for it: the liquidity shield. This is really the heart of the counterargument to all the fear and panic you might be seeing in the news. So let's unpack exactly what it is and where this thing came from.
First, let's just let the sheer scale of this sink in for a second. $1.7 trillion. I mean, this isn't just some small stimulus check. We're talking about a monumental flood of cash. That's about 230 trillion Korean won. That's about to hit the financial system.
So where did all this cash just appear from? As the slide explains, it's something called an importer refund. Basically, it comes from a U.S. Supreme Court ruling that said certain tariffs were collected improperly. So, boom, this giant pile of cash gets released back to companies. And here's the absolute kicker. Who gets most of it? The big tech giants. Their balance sheets are about to get a serious boost.
Now this is where it gets really interesting, because this slide maps out the journey of that money. It doesn't just sit in a bank account. Step 1, the cash lands. Step 2, that cash already has a job to do. It's reportedly being set aside for two main things: building out AI infrastructure and buying back company stock. And step 3 is the payoff. Both of those things create this huge buying pressure, which forms that invisible floor we were talking about, something that can prop up tech stocks even when the rest of the market feels shaky.
So how is this clash actually playing out in real time? According to the source, the first major battleground we can watch is in the crypto markets. There's a really crucial test happening with Bitcoin right now.
This quote from the analysis really nails a huge shift in thinking. The theory is that Bitcoin's role is changing. When things get really unstable geopolitically, global money isn't just treating it as a risky bet to sell off. Instead, it's starting to be seen as a survival currency, a safe haven to run to when the traditional financial world seems unstable. And this battle has some really clear lines drawn in the sand. The source points to $71,000 as this massive support floor that's just refusing to break. The critical number to watch, though, is $72,000. If Bitcoin can get and stay above that, the analysis suggests it could set off a historic short squeeze, with a target not just of $80,000, but maybe even pushing all the way to $84,000.
All right, so from the digital frontier of crypto, we're jumping to a cornerstone of the global tech supply chain. The second big battlefield is the South Korean stock market, the KOSPI. The source says this is a key arena for the future of AI hardware. Now, the KOSPI has taken a pretty significant hit lately. It's down about 12% from its recent high of over 6,200. And yeah, on the surface, a 12% drop looks pretty scary, but the argument from the source is that we need to look at this a little differently, not as a crash, but as a potential setup for what's next. This table spells out the whole scenario pretty clearly. The index has dropped down to this absolutely critical support level around 5,500, which the source calls the edge of the abyss. But here's the twist. The argument is that this isn't a meltdown. It's a massive valuation reset that could be setting the stage for a V-shaped rebound, all fueled by that wave of liquidity we talked about. So you might be asking, why would that $1.7 trillion flow into the Korean market specifically? Well, the catalyst is all about the tech. Korea has what's basically a monopoly on HBM4 memory. And that's the ultra-fast, high-powered memory that you have to build the next generation of AI. So the theory goes, if that 5,500 support level holds, this market becomes a magnet for all that big tech capital looking to lock down its AI supply chain.
Okay, so you've got these two giant opposing forces. Geopolitical fear on one side, massive liquidity on the other. How are you supposed to navigate a market like that? Well, the source proposes a pretty simple three-part tactical game plan.
And here it is, the PPP framework. The first P is for politics. The idea is to hedge that geopolitical risk with defense and energy stocks. The second P is for performance. This means accumulating the leaders in the AI supply chain while they're down. And the third P is for protectionism, which advises favoring US-based tech manufacturing, since those companies are in the best spot to get that refund. It's a strategy that's really designed to play both sides of this conflict.
And you know, if there's one single line that just sums up this entire analysis, this is it. The argument is simple. The headlines about war are the smoke, but the real fire, the force that's actually going to shape the market, is the money. And so we end with the big question this analysis leaves us with. When you're faced with these two powerful, totally conflicting stories, where do you land? In the middle of all this fear, are you actually seeing an opportunity? The source asks a pretty direct question. Are you buying the breakout? It's a fascinating thing to think about as these forces keep clashing,